Good morning, this is the latest market news. I am Uliana. Asian stock markets are mostly higher on Wednesday, shrugging off the weak cues overnight from Wall Street, as the rebound in crude oil prices and data showing the China services sector expanded at its fastest pace in 11 months in July boosted investor sentiment. The services sector in China continued to expand in July and at accelerated pace, the latest survey from Caixin showed on Wednesday, with a PMI score of 53.8. The Australian market opened lower, tracking the weak cues from Wall Street, and as investors digested the Reserve Bank of Australia's stance on interest rates. In late morning trades, the benchmark S&P ASX 200 index is declining 0.69%. The benchmark Nikkei 225 index is adding 0.54%. US crude oil prices rose modestly on Tuesday, snapping a three-day losing streak as investors await key data on US petroleum supplies and unemployment levels. Crude oil futures for September delivery rose $0.57 to close at $45.74 a barrel on the New York Mercantile Exchange Tuesday. In the currency market, the Australian dollar is almost unchanged against the US dollar on Wednesday after a push for the US rate hike from the US. Fed official offset favorable comments from the Reserve Bank of Australia. In early trades, the local unit was trading at $0.7378, up from Tuesday's close of $0.7377. Wednesday is a busy day for economic releases, including an update on the hard data for retail spending in the Eurozone in June. EU retail sales 9 GMT. Consumer spending in the Eurozone is still rising, but the rate of growth has eased lately. With Brexit risk no longer an imminent threat, analysts are looking for revival in spending. Perhaps, although today's hard data on the retail consumption for June is expected to deliver a relatively downbeat message. Spending is on track to rise a mere 0.1% in the monthly comparison, the weakest gain since March. The year-on-year estimate is projected to ease as well, dipping to 2.0%. It was the latest market news provided by ICA FX. Goodbye.